ನನ್ನ ಹೆಸರು ಸುಗುಣ ಎಸ್ಎನ್. ನಾನು ಇಂಡಿಯನ್ ಫೈನಾನ್ಷಿಯಲ್ ಸಿಸ್ಟಮ್ ಸಬ್ಜೆಕ್ಟಿನ ಫಸ್ಟ್ ಯೂನಿಟ್ ಫೈನಾನ್ಷಿಯಲ್ ಸಿಸ್ಟಮ್ ಇದರ 11th ಸೆಷನ್ ಬಗ್ಗೆ ಡಿಸ್ಕಷನ್ ಮಾಡ್ತಿದ್ದೇನೆ. ಸೊ ಈ ಸೆಷನಲ್ಲಿ ವಿ ಆರ್ ಗೋಯಿಂಗ್ ಟು ಡಿಸ್ಕಸ್ ಅಬೌಟ್ ದ ಪ್ರೀವಿಯಸ್ ಇಯರ್ ಕ್ವಶನ್ ಪೇಪರ್ಸ್. So first question I have taken here, what is capital market? So capital market simply refers to market for long-term funds. It is a market for buying and selling of equity, debt and other securities, mainly the long-term financial securities which are traded under this market. It's called capital market, and it is a market which channelizes the finance for the various needed persons like industries, trade, commerce and even other various business activities. Second question I have taken here, the distinguishes between money market and capital market. So these are the main questions which are asked in the previous year question papers. So we have to make the differences between money market and capital market. So money market is one of the market which mainly meant for short-term funds, and capital market, it is already I have told, it is market for long-term funds. The instruments which are traded under money market are commercial bills, commercial papers, treasury bills, certificate of deposits, etc. So which are mainly the term which it will be 1 year period only. The instruments which are traded under capital market are shares, debentures, bonds, etc. So which will be for the longer term, that is above 1 year, maximum up to unlimited. So next difference I have taken here, the major players under money market. So here the central and the commercial banks which plays a major role for the channelizing of finance to the various needy persons in the money market. When it comes to capital market, the including commercial banks, the development banks and investmental institutions like mutual funds, LICs, etc., which also plays a major role, are they are the major players also. And comes to last difference I have taken here. So usually in the money market there is no role of brokers or intermediaries. There will be direct conversation or exchange of finance or investment between the investor and the service provider. But in the capital market there is a need of brokers or intermediaries for the investment process. So these are the differences between money market and capital market. The third question I have taken here, name the components of financial system. Okay, financial system, it consists of mainly 4 components. First one, financial institutions. Secondly, financial markets. Thirdly, financial instruments, and financial services. So these are the 4 main components of Indian financial system. The fourth question I have taken here, what is financial system? Okay, so financial system is a set of 4 components which I have already told, that is financial institutions, instruments, financial markets and financial services, which channelizes the most efficient use of finance. Okay, especially these plays a major role and which makes savings into investments. Fifth question, so what is financial institution? Okay, it is one of the component of financial system. So financial institutions are business organizations such as commercial banks, developmental banks, investment banks and other insurance or mutual funds companies, etc., which mainly has the responsibility for distributing financial resources or finance or funds in a planned way to the potential users or needers. The next question I have taken here, the distinguishes between the primary market and secondary market. So you have to make the differences between primary and secondary market. Okay, so first one, primary market, it is related with a new issue of market. Primary market and secondary markets are the 2 components of capital market. Primary market which mainly tells about the new or fresh issue of securities to the public. Secondary market, which is related to already existing securities. So there is no a picture of new issues. So which are already issued securities are traded under secondary market. The second difference, it links the savers those require the investment, especially primary market. So there is a direct contact between the investor and the service provider. So here the investors, their savings, they're going to make the link directly. But when it comes to secondary markets, it links the buyers and the sellers of the securities. The already invested securities are investors. They're going to exchange for their further requirements. Okay. The third difference here, the period of investment is for longer term. Okay. Primary market, so it is an investment on long-term funds like equity, preference, and debentures and bonds. Okay, so usually there will be long-term period. When it comes to secondary market, the period of investment is both long-term and short-term. So why it is a short-term means, because already existing investor can go for further exchange to the sellers. Okay, so that's why it will be again short-term also. So when it comes to fourth difference, it matches the supply and demand of investment of a corporate sector. So usually the corporate or companies, they're going to directly issue to the investors here. So in the secondary market, it provides marketability of securities of the companies. Marketability means easily exchange of securities among the other buyers and sellers. Okay, these are the main differences between primary market and secondary market. Next question, give the meaning of financial asset. So financial asset is also called financial instruments. Okay, firstly, financial instrument is one of the component of financial system. It can be easily tradable, a package of capital which having their own unique characteristics and structure. So it is a virtual document representing a legal agreement involving a sort of monetary value. So if any customer want to acquire a financial assistance, he needed a legal document, a virtual document. It's called financial instrument or asset. The next question, that is, what is secondary market, and explain its functions. Secondary market is a market which is already existing securities, already issued securities, example shares, either equity or preference, debentures and bonds of the companies which are already issued are going to be traded or resold or rebought. Okay, so it is called secondary market. So in simple terms, secondary market is a market for already existing or already issued securities. So next here, what are the functions of secondary market? Secondary market functions are, firstly, it provides a market regularly. So it is a market for continuously, there is no like a stoppage. Okay, so you can trade the securities which are already issued regularly in the secondary market. The examples BSE, NSE, Bombay Stock Exchange, National Stock Exchange and other state level regional stock exchanges. The next function, that provides stability in prices of securities. So the price of a shares which will not be like a fixed or stagnant, it going to be flexible or fluctuate according to the demand and supply of the securities which happens or which are traded under stock exchanges. The third function, that is regular valuation of securities. So due to instability in the prices of securities, there will be every day or every minute there will be valuation of securities. The prices, the value of securities will going to vary. The next function here, provides safety in the dealings. How means, because the secondary markets are regulated by SEBI, that is Securities Exchange Board of India. So the guidelines and other rights and the powers which are issued or which are given as specified by the SEBI. According to that, the stock exchanges or secondary markets have to be traded. There will be a huge investor protection will be provided by the SEBI. Regular monitoring will also be taken place. So that's why there will be safety in dealings even to the investors and even the companies. The next point function ensures wide ownership of securities. Here the ownership of securities will be exchanged because they go for reselling or rebuying of securities. The investors they're going to acquire the securities. Afterwards they're going to transfer the ownership among the other secondary buyers and sellers. Okay, this is about the discussion.